A lot of homeowners make the biggest remortgage mistake before their fixed rate deal even ends. They wait until their deal is nearly finished, then start thinking about rates, lenders, paperwork, and affordability. But by then, they may have already have fewer options, less time, and more pressure. The mistake is not just leaving it late. The mistake is not reviewing your position early enough before your fixed rate ends. Biggest mistakes before your fixed rate ends. The common homeowner mistake. Mistakes have already started before your fixed rate ends because you're not actually giving yourself enough time to review your options. You leaving it late will mean that you won't have enough time to maybe look at your affordability, to not look at other lenders within the market. Because if you're looking at remortgaging, you may have to go to an alternative lender, which involves a full application process. And a lot of these lenders provide a free legal process. Now, that takes time. If you do something on last minute when your deal's going to end, that's not going to give you the time that you need to be able to refinance to a brand new lender. And ultimately, you could be the only person losing out. Why? Because your pocket. If you can get a better deal elsewhere, but you haven't given yourself enough time and you decide you're going to stay with the existing lender because you don't want to go on the standard variable rate, you're going to pay a higher monthly payment to that mortgage lender. Now, as I've said in previous videos, no one wants to give more money away than what they need to the mortgage lender. So don't do yourself a disjustice. Make sure you can keep every penny in your pocket that you can. So review your options early. And I get it. People think they've got plenty of time. I've got a full-time job. You've got a full-time job. You're probably watching this video in your own time, in the evening, for example, when the kids are going to bed. Everyone has busy lives. And the last thing you want to think about is your remortgage. This is why you need to ensure you give yourself enough time to do the things that you need to get done to enable that remortgage to get through properly. And the issue is not just about rates. It's not about checking your position early enough. Things change. Life changes. Lenders change rates. Your income could have changed. Your expenditure could have changed. Your credit commitments could have changed. What you got when you originally got your mortgage, your situation could be completely different now. So you need to get the overall position assessed. Don't assume because you got a mortgage previously that you automatically fit affordability with any lender within the market. Lenders are not fighting out to get your business. You need to meet their lending criteria, not the other way around. So the key here is the mistake usually happens before people even realize they've made it. And again, people always think they've got more time than what they think. The deal end dates feels really far away. Yeah, 6 months away. I've got plenty of time. Then what happens? 5 months, 4 months, 3 months. I've seen it time and time again. Life gets busy. You work 9 to 5 or even longer, potentially. You don't have time. You don't really want to be thinking about this remortgage. But the ultimate thing here is you have to give yourself time to prepare, because for any good broker to review your documents, you've got to send it to them. You've got to collate what they need to ensure a full matches with their specific lender so they can give you the best advice. But what will happen is if you delay it, you're just going to have less time, more pressure, and ultimately the likelihood is you won't be on the most competitive deal that you could have got. And ultimately your pocket again could suffer. And remember, it's not because you're lazy, it's because you're busy. This is why time is key. Work, family, kids, bills, life, it just gets in the way. So the problem is the mortgage deadline keeps getting closer and closer when you're busy in your day-to-day life. So remember, the mistake is not reviewing it early. Homeowners wait too long. They only focus on the rates. They think, oh yeah, if rates are going to come down, but that doesn't mean you can still get that rate because you might not have enough time. They do not check affordability, lender options, and paperwork early enough. You want to make sure that you're reviewing everything early so you're not panicking. Reviewing early is not about panicking. It's to ensure that you are giving yourself time in your busy life to enable yourself to be able to look at the options without pressure and to enable yourself a decision which is not panicked and doesn't feel rushed. It's about knowing your options, having the time to think your options through, having the time to think what is the best product for you. Is it a 2-year fixed rate? Is it a 5-year fixed rate? Is it a tracker? You want time to make these decisions because a lot of these decisions will be key decisions in your future goals and aspirations. You could be looking to stay in your current home for the next 5 years. You could be looking to move home. All of these things get taken into consideration when a broker potentially is recommending a product for you. And always remember this, your mortgage deal has a deadline. If you don't act, that doesn't matter. The deadline will never move. Your fixed rate has a set end date. So if nothing's arranged, you will move on to the standard variable rate for that lender where the monthly payment will be higher. And the key here is remember the deadline does not move because your life is busy. Hence why you need to give yourself enough time to prepare your paperwork, know what your options are, and make an informed and executive decision what's best for you and your family going forwards. To avoid this standard variable rate where your monthly payment is high, unless you want to give the mortgage lender more money, which I know you don't. And remember, your situation will have completely changed. When you got your original mortgage compared to now, your income most likely changed. Your credit commitments could have changed. Childcare or dependents have changed. You may have gone self-employed recently and you're not employed anymore. These things matter. So every homeowner may feel financially fine because lenders have assessed something previously, but that doesn't mean you can actually get the mortgage loan today. You need to know what lenders' criteria are. Lending criteria changes constantly. So what fitted then 2 years ago, 5 years ago, may be completely different now. And remember, higher income does not always mean it's easier borrowing if your commitments have increased as well. So just because your income's gone up, but you've got a car finance, maybe you've got nursery costs, these things all take into consideration in terms of the affordability of the mortgage loan the lender will give you. So remember, childcare, nursery, loans, credit cards, self-employed accounts, these all matter when you're looking at remortgaging. And the key point here is the lender is assessing your position today, not your position from 2 or 5 years ago. And lender options can change. The mortgage market may be different from when you arranged your last deal. Rates change, criteria change, affordability changes, product fees and options change. The lender that was right before for you may not be the right lender for you right now. What you want to ensure is if you fit affordability with another lender within the market and they've got a better rate, is it worth you remortgaging to that alternative lender? Or is it worth staying with your existing lender? Because sometimes your existing lender may actually offer you a better rate. But the point is you need to check, not guess checking, because checking you're knowing you're on the best deal and guessing you're knowing on the best deal is two different things. And as always, if you start preparing early, it gives you control. And what I mean by this, you're in the driving seat. You're not getting driven by someone else because you've got more time, more options, less stress, and more chances to fix any potential issues that could have arisen since you did your last remortgage. Reviewing early gives you breathing space. If something needs fixing, there's time to deal with it. And it removes panic and makes the decision calmer. So remember, more time usually means more control. And what should you be checking? You should be checking your current lender options, wider market options, monthly payments, total costs, fees, affordability, and the key, your future plans. It's not just about finding the lowest rate, it's about finding the best product according to your current circumstances and requirements and your future goals. So it's about checking the full picture. But remember, the lowest rate is not the only thing to consider. It's all about products, the fees, the affordability, the flexibility of whether the mortgage still suits your life now. All of these things get taken into consideration before any recommendation is made to you or what you should be considering when you're choosing your next mortgage deal. And this is the key thing here, the smart fixed rate ending strategy. Start 6 months early, secure a backup option where suitable, keep reviewing the rates and make a financial decision calmly. And why? Because this will give you a clearer view and an action plan. You reviewing early makes you have less pressure and you're not making a decision based on pressure, you're making it with calmness and efficiency. And if you can secure something, secure it if it's appropriate. Keep reviewing it before completion. If rates improve, look again. If rates don't improve, at least you've safeguarded it and you're protected. The key takeaway from today's video is don't wait until the last moment because ultimately it's your pocket that's going to suffer. Preparation always beats panic. If you're prepared and you've got time to think, you're going to make calmer decisions and wiser decisions than panic decisions. And the earlier you review your options, the more control you have. And the mistake is not that the fixed rate ends. The mistake is reviewing your options too late. The smoothest remortgages are usually not the ones where people predict rates perfectly. They're the ones where people prepare. Now this leads me into my next video. Why leaving your remortgage too late is dangerous. It will explain to you when people run out of time, late decisions can mean fewer options and more pressure. So check out the video here. It'll explain to you why leaving your remortgage late is dangerous and how it can leave you with fewer options.